Real estate can make you money, yes, but it can also offer tax benefits and strategies that will help you lower the impact on your W-2 income taxes. However, it's essential to note that real estate laws and regulations can be very complex and based on your unique situation and your jurisdiction. That's why it's also so important to consult with your tax advisor before implementing any of these strategies. Don't come back and say Carla said without talking to me. That is why we're going to go over all of these strategies and the potential ways that you can lower your tax liability. But before we do, you know exactly what time it is. It's time for you to like, comment, and subscribe so you don't miss out on any wealth building information. Now, you guys, let's get after it. One of the primary tax benefits of owning real estate really is depreciation. Depreciation allows you to recover the cost of your investment in your property over time. So hypothetical wear and tear. It literally says if you bought this piece of property, we're going to give you a non-cash expense every single year that is going to reduce your income, and we're going to allow you to take it against the income you earn from your real estate. This could potentially lead you to a loss. It could help you lower your overall taxable income. Remember, depreciation is not an expense that you're actually going to write a check for or use your credit card to swipe. It's part of the IRS code that you're able to benefit from actually using depreciation to lower your overall taxable income. The second strategy when it comes to reducing your W-2 income is understand Code Section 1031. If you are a real estate investor and you have W-2 income, you earn money, that's how you were able to qualify for a loan to get your real estate. Now you're ready to level up. You're saying to yourself, instead of having one property, I now want to sell this one, maybe buy two, or I want to actually sell it and buy a bigger building. Well, Code Section 1031 allows you to sell the property, get a gain, actual cash, but you have to parlay that cash into the next piece of property. What does that mean? That means you can't get the cash in your pocket. That means that you can't put it in your individual bank account and wait to go find another piece of property. It actually means you sell one property, you let the cash go sit with a third-party intermediary, and then you go acquire another piece of property. You're able to defer the gain. You're not going to pay extra taxes on top of what you're already paying on your W-2 wages. This is really one way that wealth is built. We sell one property, we buy two. We sell two, we get four. We sell four, we get eight. And we just keep going and going and going. And we're able to defer the gain, but use the cash that's not taxable to purchase our next piece of property. This is such an excellent wealth building strategy that I want to make sure you actually thoroughly understand it. This is something that investors do all the time. Interest deduction. When you own real estate, let's face it, many of us are not going out there buying property for cash. We're using OPM, other people's money. We're going to the bank and we're securing a mortgage against the property for which the bank is going to charge us interest on the principal amount that we owe on that loan. But that interest deduction that we're paying every single month allows us to lower our taxable income. And let's say, for example, I own a piece of real estate and I'm a W-2 wage earner. Whether or not I have a tenant or don't have a tenant, as long as my property is available to rent, I got to make sure that I can deduct that interest payment. So I'm making that payment no matter what. They're not saying to me, hey, Carla, you don't have a tenant. You don't have to make your payment. I still have to make my payment as long as I have that property as an investment. Therefore, that interest deduction can flow against my W-2 wages. So if I have income from my rental, I can use that interest deduction to lower the income from my rental and get me down to either a lower net profit or maybe even a loss. If I don't have any income from that rental, I can still take that interest deduction as long as my property was available for rent. That interest deduction can go against my W-2 wages and lower my W-2 wages. So if I were making $72,000 a year as an example, and I'm paying $1,000 a month in interest, I'm gonna have $12,000 worth of interest for the entire year. Therefore, that $12,000 can go against my $72,000 in wages and drop my income down to $60,000. That's why your interest deduction when you own real estate is really important. Many times, my investors get in trouble from a tax perspective because they pay off their loans and they forget how powerful that interest deduction is. Yes, it costs you money, but here's the thing. We got to look at the overall tax implications, especially if you have somebody else paying your mortgage, right? You have a tenant paying that mortgage. We got to look at the bigger picture because maybe paying off that mortgage wasn't the smartest thing to do from a tax perspective. We got to always be thinking tax smart when we own real estate. It's really important. Real estate professional status. Many of you may not be able to even deduct your rental losses. Many of you may be making above $100,000 as a single person, above $150,000 as a married filing joint couple, and you may not even get to deduct your rental losses. Well, you might want to consider being a real estate professional. I didn't say be a real estate agent. I said a real estate professional. This is something completely different. It doesn't mean you have to go out and get your real estate license. Absolutely not. What a real estate professional means is that you got to do two things. You got to materially participate in your real estate, meaning you're managing your real estate, feet on the street. You're actually doing some things to make sure that your real estate can continue moving forward. Maybe you're doing some of the repairs. Maybe you're there managing. Maybe you're doing the lawn maintenance. Whatever it is, you got to be putting in the hours to manage your real estate. And you also got to be in a business associated with real estate. That's where setting up an LLC and managing your business from your LLC becomes really important. Because when you can qualify as a real estate professional and you can check those boxes, you're now able to take your rental losses against your higher W-2 income. Pass-through taxation. Here's the thing, my friends. LLCs, S corporations, they're pass-through entities. Remember what I said about pass-through entities. We file a separate tax return, yes. We're going to file that 1120S as an S corporation. We're going to file that 1065 as a multi-member LLC. However, what's going to happen when we file those returns? We're going to get a K-1 form. That K-1 form is what we get to flow through entities, to flow through to our individual tax returns so we can use the net profit or the net loss to offset our W-2 wages. So I don't want you for 1 second to think that if you own your real estate in an LLC, that if you own your real estate in an S corporation, that you can't use it to offset your W-2 wages. You absolutely can. And here's the other thing. When you own it inside of a business, we want to make sure we're getting all our other business write-offs because you are a business owner now. Not just the write-offs as it pertains to the real estate, but the write-offs as it pertains to the business can also flow through to your personal income taxes. I love real estate. I love offsetting W-2 wages with real estate. I love understanding depreciation, something that the government gives us to lower our taxable income. I love the strategy of a 1031 exchange. I'm never trying to pay off a mortgage. I'm going to always use OPM, other people's money, especially when I have a tenant paying my rent. I'm getting all the interest deductions that I can possibly get. I'm going to make sure that I understand real estate professional status, and I'm going to make sure that I educate everybody on real estate professional status, and I'm gonna always make sure that my real estate gets the great asset and liability protection it needs by being in the right entity. And understanding all these things is the reason why real estate investors can continue to lower their taxes, keep cash in their pocket, and put money back in their real estate. And here's the thing, my friends, you now know better. You can't tell me that you don't understand this stuff because I am breaking it down for you all the time. And now that you know better, you absolutely got to do better. You got to go out and educate others. You also got to like, comment, and subscribe so I can keep updating you on all things real estate taxation.